welcome to 3.0 TV. This is Shikha Singh. Over the past 24 hours, financial markets, including cryptocurrencies, experienced a sharp sell-off. The total crypto market capitalization dropped 8% to $2.86 trillion, reaching a 3-year low. Bitcoin fell to $86,700, its lowest since November 2021. And other cryptocurrencies like Ethereum, XRP, and Solana saw declines between 8 to 10%. This decline followed US President Donald Trump's announcement that tariffs on imports from Canada and Mexico would proceed next week, spooking investors. However, Binance CEO Richard Teng emphasized that this is a short-term dip, not a structural decline, as crypto markets have historically bounced back. Bitcoin's market dominance has risen from 41% to 61% since November 2021, while Ethereum's share has dropped from 20% to 10%. Cryptocurrencies outside the top 9 have also lost ground, indicating Bitcoin's growth at the expense of smaller assets. On Tuesday, which is 25th February, US spot Bitcoin ETFs saw their largest ever daily net outflows totaling $1 billion, with 10 out of 12 funds reporting outflows. Fidelity's FBTC led the way with $344 million, followed by $164.3 million from BlackRock's IBIT fund. Other notable outflows came from Valkyrie's BRRR, Bitwise's BITB, and Grayscale's Mini Bitcoin Trust. These outflows exceeded the previous record of $671 million from December 2021. Two leveraged Bitcoin-linked exchange-traded funds, MSTX and MSTU, saw their prices drop nearly 50% over the past 5 days following Bitcoin's decline below $87,000. MSTX was trading above $43 last week, which fell to $23, and MSTU dropped from $9 to $4, reflecting a surge in trading volume. The broader equity markets also face a sell-off after US President Donald Trump announced plans to impose tariffs on Canada and Mexico next week. Leveraged ETFs, which use derivatives and debt to amplify returns, carry higher risks, and this drop reflects the broader risk-off sentiment in the market. Additionally, Strategy, formerly known as MicroStrategy, which holds nearly 500,000 bitcoins, saw its stock price fall nearly 10% to around $255 per share. PayPal is expanding its PYUSD stablecoin integration to more products this year, aiming to serve its 20 million merchants. This integration will include a new bill pay feature, allowing merchants to pay and receive payments in stablecoins, reducing currency conversion fees and payment delays. Additionally, PayPal plans to incorporate PYUSD into Hyper Wallet, enabling faster, cheaper global payouts to freelancers and businesses without relying on banks. PYUSD has grown rapidly, surpassing $1 billion market capitalization by September 2024. The stablecoin market is becoming increasingly competitive, with major players like Tether, Circle, and Ripple expanding amid regulatory changes. BlackRock's digital asset strategy has come under scrutiny after the financial giant moved approximately $204 million in digital assets, likely tied to its two spot crypto ETFs, IBIT and ETHA. The transfers made to Coinbase Prime have sparked speculation about BlackRock's intentions, with some analysts suggesting it could be rebalancing, redistributing, or simply custodying its assets. While BlackRock has not confirmed its plans, the move coincides with a broader crypto market downturn following US President Trump's tariff threats. This has led to discussions in the crypto community about whether this marks a shift in traditional finance's involvement in digital assets. South Korea's Financial Intelligence Unit has imposed sanctions on Upbit, the country's largest cryptocurrency exchange, for violations of Know Your Customer regulations. The FIU found that Upbit's operator Dynamo failed to properly verify customer identities, processing transactions for users with blurry or incomplete identification, leading to 34,777 KYC violations. The exchange also facilitated transactions with unregistered foreign service providers, violating compliance laws. As a result, new users will be restricted from making crypto deposits or withdrawals from March 7th to June 6th, though existing users can continue trading. Upbit plans to appeal the sanctions, arguing that they are excessive and asserting that it has already made necessary compliance improvements. This penalty follows previous warnings and further violations, and it could lead to significant fines, with penalties potentially reaching $34 billion. The European Council has sanctioned Moscow-based cryptocurrency exchange Garantix as a part of EU's 16th package of sanctions against Russia. Garantex is linked to Burbank, T-Bank and Alpha Bank, all of which have been under EU sanctions since 2014. The EU claims that Garantex has been facilitating access to the global financial system for these banks' customers by converting rubles into cryptocurrency. Garantex has already been sanctioned by US and the UK, and it has been accused of enabling illicit financial activities including ransomware transactions and cybercrime. Despite these sanctions, Garantex continues to process billions of dollars in transactions annually. The exchange is also considered a significant player in Russia's illicit cyber networks, with ties to dark web markets like Hydra. The US Securities and Exchange Commission has ended its investigation into Uniswap Labs with no enforcement action planned. This follows a trend where the SEC recently closed similar probes into other major crypto entities including Coinbase, OpenSea and Robinhood. Uniswap had received a Wells notice from the SEC in April, which indicated that the agency was considering a lawsuit over allegations that its decentralized exchange operated as an unregistered securities exchange and broker-dealer. This move provides reassurance for DeFi companies, signaling a more favorable stance towards decentralized technology. Bank of America CEO Brian Moynihan expressed the bank's readiness to launch its own stablecoin contingent on a favorable regulatory framework. He emphasized that a fully dollar-backed stablecoin could function similarly to existing financial products like money market funds or bank accounts. Moynihan also highlighted the shift towards a digital economy, with most large transactions already being digital, and noted that the US banks would embrace crypto payments if clear regulations are established. While digital payment methods dominate, he acknowledged the continued importance of cash, especially from small businesses and consumers. ARK Invest, led by Cathie Wood, recently purchased 41,032 shares of Coinbase for $9.3 million despite a dip in tech stocks and Bitcoin falling to multi-month lows. This move follows a previous sale of $4.3 million worth of coin shares in December. The purchase was made through ARK's Next Generation Internet ETF, which focuses on companies in the next-gen internet sector. Coinbase's stock has struggled recently with 6.42% drop on February 25th and a 20% decline in the past week. However, ARK remains bullish on Coinbase, partly due to its strong Q4 earnings and the SEC dropping its lawsuit against the exchange. ARK also sold shares of its Bitcoin ETF. Well, that's all in today's special segment. We will keep you updated with more such interesting updates. Until then, keep watching 3.0 TV. Do like, share and subscribe to our YouTube channel. Do log on to the website www.3versetv.io. Scan the QR code to know more.